Good morning, RJ Baxter here. So last week I shared with you an example of what it might cost someone to wait to buy a home if they're currently renting. And I wanted to follow that up with some hard data on what's happening with home prices currently with interest rates coming down that supports what I was talking about last week. You guys are going to really like these numbers, and this is going to help you when you're out there on the streets talking to people that are on the fence as to whether to buy now or to wait. So let's check it out. All right, so these are numbers from the Case-Shiller National Home Price Index, which is one of the benchmarks for home price appreciation. And as you can see, over the last year, taken as an average, we only saw a 1.3% increase in home prices nationwide. Now, granted, Denver has been one of the struggling markets, and we've seen, if not flat, maybe even a little bit negative home price appreciation. But that being said, let's take a little bit more deep look at these numbers. So this is a breakdown of the month-to-month numbers. And as you can see, during the middle of the summer last year, we actually had depreciation. Son of a gun. All right, so what we're looking at here is the Case-Shiller National Home Price Index. This is one of the benchmarks for home price appreciation nationwide. And as you can see, appreciation has obviously fallen off quite a bit over the past few years since COVID. In 2025, we saw only a 1.3% increase in home prices nationwide as an average. Now, we all know that Denver has been one of the markets that's lagged, and we've actually seen a little bit of a decline in home prices in most areas. But that being said, let's take a closer look at this data. And this is a big eye-opener as far as what we see happening right now as a trend in the industry. So this is a breakdown of the month-to-month numbers in the Case-Shiller Index. And as you can see in the summer months, it was actually a negative number for 5 consecutive months. Now, this corresponded to when rates were at a higher level. So we were in that upper 6s to low 7s range this summer. Well, in August, this is when Jerome Powell, the Federal Reserve Chairman, came out with verbiage where he was talking about a more dovish stance in regards to interest rates. In other words, a more accommodative monetary policy, which leads to lower rates. Immediately, we saw rates start to improve. And what we saw later in the year is actually home price appreciation returned to historic averages. Rates started declining and prices started rising on homes in the later part of the year. So we've seen this historically. When interest rates go down, it tends to cause home prices to go up. So if you take what's happened for the past 5 months and you annualize it, it actually factors out to over the past 4 months, it's an annualized rate of appreciation of 4.6%. And over the past 3 months, an annualized appreciation of 5.3%. Now, we've seen that trend continue as we've gone into the new year, and rates have gone even lower. And we're now in the upper 5s to low 6s, generally speaking, for most scenarios. So the logic would tend to suggest that we're going to see home price appreciation in 2026, which means that our buyers that are on the fence and are waiting for home prices to go down or for interest rates to go down more, they could be left holding the bag and end up paying more for the same house later this year. So this is great information to have as you're heading out into the market and talking to buyers this weekend who might be debating whether it's a good time to buy or not. So the argument is buy now before those home prices go up, so you're not paying more later. You can always refinance that mortgage to a lower interest rate. So I hope that helps you guys out. Have a great weekend. Give me a call if you have any questions or coming across any buyers that would like to chat about this or anything else. Thanks a lot.